Good evening, traders. This is Taylor. Thanks for stopping by thetradinganalyst.com. We're going to take a look at a bunch of charts here, and I'm going to go over my analysis and give you a couple of trade ideas to help you navigate the market. But first, if you're not already a member, go ahead and visit the home page of the website www.thetradinganalyst.com, and you can see all of the member benefits. We've got text message and email alerts, daily watch lists, daily member videos to help you prepare for the market day ahead, and educational videos and material as well. And if you scroll down here, you can see all of the member benefits and read through everything that we've got right there. And if you're interested in signing up, you can sign up here at the bottom of the home page. We'd love to have you. All right, so let's get into these charts here. The first one that I want to cover is CELG. It's a biotech company, and we've got a couple things that I want to point out. So right now, we are in a downtrend on CELG. We've got a high over here rejected, over here, here, and again right here. Okay? When we were trading right here, it looked like we could have broken out. And I'm going to zoom in here now that you see the trend right there. But what we had here is we had a bearish engulfing candle right here. And to me, that's not really enough of a short signal just yet. Another red candle right here. To me, that's not really a good enough short signal just quite yet. But today, we got a close below this support that we've been holding right here. So the low of this candle, this candle, this candle, and this candle was violated today as we closed below that level. So about 103 is going to be that resistance level. And I do think that CELG heads lower as we did break this support line right here, and we are in a downtrend. The main support we have is right around $95, as you can see from the lows right here, lots of touches there, and that's right around where we bounced on these crash lows right there. That is CELG. Next one I want to cover is CHK, and CHK, another one, we've got a pretty big downtrend right here. We've got a touch right here, as well as right here, and then again right here. So that's the main trend that we're looking at for CHK. And right now we are trading in a very sideways tight range. I'm going to zoom in a little bit more so you can see it. So we're in a very sideways tight range. If we break out of this range in either direction, we're going to see a big move. As you can see, the Bollinger Bands, which is this gray line right here, and this gray line right here, you can see that they're very tight. The last several weeks, we've been trading in about a 30-cent range. Okay, it's a very, very tight range for this stock here, and a move outside of that range in either direction is going to see a big move. So look for a break either to the downside below 4 or on the upside above about 5. So we've got about a $1 range right here that we're looking at, and if you see a break outside of that range, that means we're going to see a big move. And so you might ask, why will we see a big move if it breaks outside of that range? Well, that's because when stocks are trading in a sideways range, they're building up energy. Okay, they're building up energy for the next move. Now, when they do this, we don't know which direction it's going to be. Okay, there are some signals that you can look for, but we'll save that for another time. But it's somewhat dangerous to trade within this tight range because you risk a very big move that it's hard to trade in if you are wrong. So let's say you go short right here at the top of this little range right here, and then it ends up blasting up through 5, because that's what it's capable of doing. When it's in a very tight range, the break outside of that range is going to be very big and fast, and it's going to be really hard to manage. So unless you have your automatic stops in there, it's going to be really hard to manage. So that's why it's best to wait for the break, and then you're going to have plenty of time to react to either go long or short. Next one I want to look at is Chipotle. And Chipotle broke outside of this tight range that it was trading in. Same kind of thing as CHK and right here. So you can see that we were trading about 388 to 410 up here. Got rejected, 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 rejected on these few candles. And then right here, we broke over this range right here. So more than likely, Chipotle is going to be heading higher. The main resistance I see for Chipotle is right around 431. And we've also got this downtrend line right here from these highs and these highs and these highs that are right there. So we could come up there on an intraday basis, hit that 431, and then potentially get rejected. I don't have a crystal ball. I don't know what's going to happen. But I do know that it's the next resistance level is 431, and we've got support at 410. So you can play those levels moving forward for Chipotle. Next, I want to cover Facebook. And Facebook right here, this line right here, and I'm going to get to that, what this line is and why it's important. And we've got a retest of the underside of this line. So I do think that Facebook may have some trouble moving higher from here. And I'm going to look at now the weekly chart. And you can see that this is a pretty big rising wedge right here for Facebook. Okay, we've got the lows right here, lows right here, here, and then we finally broke out of this range right here, and we came up and we're retesting it right here. And you can see this range getting really tight up at these highs, really tight. So that's exactly what a rising wedge is. You see the range is getting tight at the top. So if anything, this is a caution on the long side up here. It can definitely break out, but it's definitely something that you need to be aware of if you are long, because this is a bearish pattern and we did break to the outside of it. Next, I want to cover FEYE, and we've got a couple things going on here. So this is the daily chart here, and we've got a downtrend right here, a couple touches here, 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 again here, here, and we're just barely above it right now. So I'm not quite convinced just yet that we are over it, especially because we've got something a little more important on the chart still above us, and that's a lot of resistance. So we've got the resistance from these few candles and these few candles and these few candles right here that we're still below, okay? And the bottom side of all these candles, that's that level as well. And then once we break over 17, if we break over 17, we've also got the highs of all of these candles just below $19. As you can see right there, it got rejected many times. So for me, at the very least, just cautious up here. It can break out. If it breaks over these levels right here and shows some strength, we can see a really, really nice breakout on FEYE. But until it does that, the direction of least resistance is going to be down. So for me, it's kind of a no touch until we see either a further break to the downside or a further break to the upside. But you need to be aware of why that is. We've got a lot of resistance up here, and it has not. We're kind of in that in-between zone right here. At least that's the way that I'm seeing it. Next, I want to cover JCP, and we've got a bear flag right here. We're in a downtrend since the beginning of March. got the highs right here, 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 and here that's gotten rejected. And as you can see, we kind of had this sideways trading action. And right here, we are in this bear flag still. But if we get a break to the downside out of this flag, so maybe a close below about 830 or so, below the lows of these candles right here, then that will signal some more downside on JCPenney. If we break over, if we close over about 915, then that will signal some upside on JCPenney. So look for both of those levels, 920, or I'm sorry, 915 and 830 are those two levels that I'm seeing of importance on JCPenney. Next, I want to cover JP Morgan, and we've got a downtrend that you should be aware of. We've got a touch right here, several touches along these highs right there, and then I'm going to zoom in right here, several touches against these highs as well. And we've not only got that downtrend line, but we've got that resistance from these highs right there, which are horizontal resistance. So just be aware of that on this chart, something that you want to be definitely aware of if you are long this stock, because it does have quite a bit of resistance up near that $65, $66 range. Next, I want to cover REGN, same kind of thing as CELG. We've got this downtrend line, a couple touches here, a couple touches here, and here, and here, as well as just recently right there. And you can see that we finally got that, break away from that downtrend line. So when we're kind of, up against it with these 1, 2, 3 candles, it still risks that you can break to the upside over that downtrend line. Over here, kind of the same thing. See how we're kind of hanging out with these candles right here, but then you see the break away from it right here, and to me that's when it's kind of safe to short against that downtrend line and say that it is going to eventually come to the downside. So that's the way that I'm seeing it. REGN is in a downtrend, more than likely going to be coming down from here. Next, I want to be covering, and I believe earnings are coming up for REGN. So once that happens, these charts are kind of off the table because we can see a big reaction in either direction. So just putting a little disclaimer out there that I don't personally trade during earnings because I don't really have an edge heading into earnings because we can see a big move in either direction, and sometimes those moves are somewhat irrational and a little bit harder to determine which direction it's going to be heading in before it happens. So I don't personally trade earnings, and you can kind of do whatever you want to do, whatever suits your personal style. Next, I want to be covering VRX, and VRX, I'm going to pan out here. Longer term downtrend line right here, touch here, several touches right there, and then we've got a faster moving downtrend line right here, a couple touches here, here, and as you can see we grinded up against it right here, and then we finally saw that breakaway candle right here on that heavier volume. So to me, looks like VRX is going to be continuing to the downside given the nature of the downtrend, as well as the bearish engulfing candle right here on pretty heavy volume. So I think that VRX is going to be continuing to the downside, and the next support is going to be right around these lows, about 1870 or so. Alright guys, that's it for the video. Again, if you're not already a member and you're interested in becoming a member, go ahead and visit the home page and sign up for the membership today and start receiving alerts and member videos immediately. Have a great night, and we'll see you next time.